that you need to transfer some of that out, rebalance, buy some gold, get some put spreads in place, do some things for what probably won't happen but could in order to cover that. It's more important in investing to outperform the market in downswings than it is in upswings.
This is Little by Little with Andy Schechtman.
All right, howdy, back again for another episode of Little by Little. With me, I have Bob Iaccino, someone who I've grown to be a great admirer of. Bob, thanks for coming on, brother. I really do appreciate it.
Really good to be here and happy to see you again. It's been a while.
Yeah, man, thanks indeed. We were talking offline about the hurricane. You live on the West Coast, I live on the East Coast. And You, in theory, were right in the path. I, on the other hand, wasn't. And in fact, we were told as far as 3 or 4 days leading up to Milton making landfall on the West Coast that it would be maybe some heavy rain, maybe some heavy wind, but really nothing to be too alarmed about. The path was about 100 plus miles, 150 miles north of us. The reason I bring this up, Bob, is because I learned a valuable lesson. I think both of us moved down to Florida roughly in the same time. And if I had to guess, I would say you moved from Chicago. Is that correct?
That is correct.
Yeah, because you worked on the Board of Trade, which I'm going to ask you about in a moment. But I come from Minnesota. Where most of my Minnesotans are on your side, I'm one of the only ones on this side. And
I meet a lot of them here.
Yeah, I bet. That's where they all went. I'm kind of like a unicorn over here. There aren't many of us at all. But one thing that, as a Minnesotan, kind of freaked me out, I should say, but I think it's a really important lesson on a broader scale, is the concept of preparedness. Now, here we are being told that, it's going to be okay, just maybe button down your lawn furniture, kind of thing. It's not going to be such a big deal. We're out of the main path. And 72 hours before it hit landfall, I couldn't get a quarter mile from Costco in either direction. Dead serious. I mean, lines, that's just to get in the parking lot. And then I go to Publix, which, as you know, being a Floridian, they're on every street corner in the state. And coming from a place where the worst thing I ever saw in 50 years in Minneapolis was a blizzard, which was kind of fun, you'd sit down with a bottle of scotch and whatever, watch TV, play games, just it's a snow day, no school, everything's great. But here, 3 days before this hurricane, no eggs, no water, no milk. And I mean, when I say no, I mean nothing. And no meat. I mean, just a couple little cartons of meat all the way up and down this big, long set of frozen or the displays, or the cooler displays. It blew me away. And I'm like, it kind of resonated with me in terms of preparing for whatever is coming, preparing for what the future looks like. And I just wanted to bring that up and kind of get your feelings on preparedness in general. And I'm not just talking about preparing for a hurricane, but, there are a lot of people, myself included, who think that things are going to change here financially. Things are going to change economically. Things are changing politically. What's your feeling in general about deviating from the norm and expecting or preparing for the unexpected? Is that something that you do as someone who has, and excuse me for saying this, but lived within the mainstream in terms of your success as a trader, your success on mainstream television, on CNBC and Fox? You're all over the place. Is it difficult to kind of straddle that line between what you've learned and what has made you successful, and sometimes some changes that you see coming that could materially affect the status quo?
So first of all, Andy, you are a master of setting up a question, because it was about halfway through, I was like, where's he going with this? And then all of a sudden I'm like, Oh, I see where he's going with this. And you kind of hit in one of my sweet spot subjects because I was not a Boy Scout. I was not a be prepared kind of a person growing up. Trading and investing actually got me to that place. If I could, when I first started trading, I lost close to six figures, and it was well up into the high five figures inside of 9 months. And that's because the entire time the market was wrong and I was right. Now, I'm being sarcastic because obviously I lost 97 some odd $1,000. So I wasn't right? Just to me, I was so smart. I was going to figure this out. And people in Florida deal with storms in an interesting kind of a way. So I started living my life in such a way where I thought about the negative outcomes and prepared for them. So I'll give you an example. After I lost that big chunk of money, well, I still wanted to be a trader. So I went back and I thought, okay, I'm going to kind of what I think is invent this concept called real world break even. And I'm only going to take a risk in trading if I could make myself break even in the real world. So what does that mean? Well, I remember the first trade where I applied this concept that I still believe I created. I used to go to a place called Mangino's Italian Sandwiches across the street from the Chicago Mercantile Exchange when I was there. And lunch at that time was about $11 for a pretty good sized sandwich, chips or coleslaw, and then a drink. And I remember thinking to myself, okay, I'm risking about $66 on this trade. So I need to bring a lunch from home for about 7 days if I lose on this trade in order to make myself real world break even, right? So I said, yeah, I can do that. Well, then the reason I say 7 days and not 6 days is because I had to buy the food that I brought for lunch at the grocery store. So I literally took it down to that. I brought tuna to work. I lost on that trade. And I brought tuna to work, canned tuna, for 6 straight days. Subsequently, I lost 5 pounds. So I said, this is probably the right way to do this, right? Is to sort of combine my sort of health along with my real world break even concept. But that's actually how I built up. So from that point on, being prepared for the thing that I didn't think was going to happen, or that I thought was a low probability, but I could see it happening, right? Became the core not only of my trading and my longer term investing, but of my life. So prior to Helene, I had, when we bought this house, we made a conscious decision. This, again, that preparedness thing, right? How often does a hurricane hit the Naples area? Well, hit it hard about once every 30 to 40 years because of the shape of the coastline. Do tremendous damage about once every 100 years. So that was a reason to pick this city. Also, it's a great place if you've ever been here. But also, we made a conscious decision to live about 20 minutes away from the Gulf. Now, a lot of my friends are in Chicago. Well, you're 20 minutes away. You're not even close to the water. Well, you morons, I used to be a 2.5-hour plane ride. Okay, now I'm a 15 to 20 minute car drive, depending on traffic. I've even ridden my bike there, right? So I'm close enough. But we also, our number one priority for buying a house was a low probability of flooding, which, apps like Redfin and others will tell you what the probability of a flooding being there. Because of this, I've survived 3 hurricanes with damage to 1 tree and a couple of screens that are screened in porch. And that's it, right? In exchange for that, I have to drive to the beach. This applies to trading and investing, right? Because I may have a guy who's got, a client who's got about 80% of his wealth in NVIDIA about 3 years ago. But now he's starting to go, what should I do now? And I'm like, I've been trying to tell you this whole time that you need to transfer some of that out, rebalance, buy some gold, get some put spreads in place, do some things for what probably won't happen, but could, in order to cover that. It's more important in investing to outperform the market in downswings than it is in upswings, because making that money back is difficult. Rebuilding your home, if you get nailed by the floods of a hurricane, the Gulf storm surge, is much, much more difficult than replacing a couple of screens and driving 15 minutes to the beach.
Yeah, that reminds me of my mentor, Richard Russell, I guess summing it up, saying, avoid the big loss. And I think that's important, to frame it the way that you have. I think that's That's a very interesting way of looking at investing, and one that is often overlooked. And I think it's spot on. I would listen to your advice with that in mind. You know, when I watch you, Bob, I look at you. One of the things that resonates with me, I look at myself. I've been doing this for 35 years, right? And I started in 1989, and I like to fancy myself as being old school. I look at you that way. I look at you as an old school guy. A handshake, your word means something. You come from a place that is no longer relevant, or not. That's not the right word. You come from a place that's gone. And that place would be the open outcry system of the mercantile exchange. And I spent a little bit of time there at the very, very end when it was transitioning from open outcry to the like the handheld Palm Pilot type of thing, to now it's completely gone. What'd you learn from your time on the trading floor in terms of old school ideology, in terms of the way it used to be done? And these kinds of things were really important in terms of relationships, in terms of following protocol, following through. I guess it's just more old school to me. And to me, those old school priorities and those old school properties transcend so much, no matter where we are, no matter how far away we get from it. To me, everything I learned back then shaped the way that I look at the world. What did you learn, and what did you take away from being on the floor?
Well, being on the trading floor was going to be either a handshake or a fist. And that was a very, very big deal to us at the time. I was one of the smaller guys down there physically, right? Not from a muscle density perspective, but height, right? I stood next to a guy who was 6'8" and another guy who was 6'11", played basketball at DePaul. And one day I looked up at them and I said, I don't think we have the same DNA. I really don't. I look like your child, right? Like if those two guys had an alien baby, that's what I would be. But it really was a situation. It was a self-policing system, right? Where if you screwed somebody, everyone heard about it in 30 seconds and you never got a trade again. And people can hide behind their online persona now and with online marketers and things like that. But I've always felt, and it's part of the reason I agreed to be on this show, despite you and I not having spoken for a number of years, is because you came across to me as someone who I could shake your hand and we'd be done. There would be no reason for me to come and hit you, and no reason for you to fly out and hit me, right? And it's critically important, and it's critically important to understand that a lot of people don't have your best interests at heart. And by that, I mean advisors, dealers, stock firms, futures firms, any of them. And I always caution people to look for there's a great line, and I think this is the proper way to say this particular line because the line is not new, in Inglourious Bastards, where Brad Pitt says, where I come from, Maynardville, Tennessee, we got an old saying, if it's too good to be true, it ain't. Right? I think that's a better way of saying if it's too good to be true, it's not true, right? So I tell people all the time to keep an eye on that, because if you get shystered, for lack of a better word, by a company or a person, you're probably not going to go meet them on the street corner and figure it out like we used to, or in the trading pit like we used to. I mean, you could see it. If anybody watching this Googles Nova open outcry, about the first 10 to 15 minutes of that documentary is me and my partner, Pete Ory at the time, at our phones, taking orders and trying to see if there was a recent spread to go into the pit and do the orders. And you could see the looks on our face. Like, we're not goofing off. We're not joking around. We had to be dead serious for 6.5 hours. And it seems like a short period of time, but it's because if you weren't serious, like, you could goof off if you had no orders, but if you weren't serious with an order, you were done. Your career was over. If you tried to go in there and fool people or hijack an option or hijack a bid or an offer, yeah, you might make money on that one, but you were done. You were running the Lowe's paint department in a matter of about 18 months after that because you couldn't get any trades done. So, and yeah, I mean, I've been doing this I started in 92. So just after you. So I've been doing this about 31 years, I'll call it. And it still bothers me, the difference between people like us and some of the people I see out there now.
Yeah, I don't know if you know my good buddy Joey Partapillo, but Joey
I love
was,
Joe.
yeah, it's funny that you know him. And he's in my mind, one of the greatest guys I've ever met. He introduced me. Yeah, I'm going to have to send this to him. I go way back with Joe, but he's the kind of person like you, old school. He says it. You don't worry about it. It's done. It's as good as gold. And these were the kind of people that I talked to when I first came into the industry as a 19-year-old kid, the guys from World War II, that their word was their bond. And I asked you that question for that reason. I asked you this question because I think people need to understand the kind of person you are and the kind of morals and character and fundamentals that shape your career. It resonates with me in watching you. And so I'm glad we both have mutual friend in Joey. That makes me feel better. All right, now I'm going to ask you.
It's funny. His badge was Jolt. And
yes, in fact, and Jeff Jolt.
Yeah, and it was Jolt, and I knew him as Jolt for years before I even knew his first name. And one time when somebody said, "Do you know Bob Iaccino?" He's like, "No, Bobby Bix." Oh yeah, I know Bix. Because my badge was BIX, and that's kind of a fun thing about back in the day. Joey is a tremendous human being. I love the guy.
I agree. And he's down here in Florida half the year too. Maybe we can twist some arms and we can all meet and break bread one day. That would be great. I'll send a message.
I'd love
you
that.
both. I'd love to do it. He's over on my side here, so we'll have to meet somewhere in between. Anyways, look, that's cool, man. That makes me happy. So over the past year, almost two, we've seen gold and silver reaching new highs. And, it's interesting because it's coming in the face of a positive real yield, if we believe the information coming out of the BLS and the CPI. It's come at a period of time where you look at the ETFs, they've been flowing outward in the West at a 45-degree angle, chasing like your client, NVIDIA, Apple, the high-flying tech, even things like Bitcoin. We see dollar up about 4% now. And at the same time, gold is reaching new highs. At the same time, the stock market is reaching new highs at both their record levels, which normally we don't see these things. We don't see the dollar up, the stock market up, and gold up. It's usually the opposite of that. Those two up, gold not up. I guess my question is, how do you see or interpret this decoupling of gold from its usual influences? And what does it signify to you when both the stock market and the price of gold and the dollar are hitting new all-time highs?
So it's funny you bring this up. Myself and my co-host, Jim Iorio, we have a show called The Future's Edge, Finance Unfiltered, right? And we do these shows weekly. We've been doing them for a long time. And part of what has happened to us now is we're starting to be called gold bugs. And we're not gold bugs. I did a TV interview in November of 2022 where I believe it was Bloomberg, but I honestly, it's so long ago now. And they asked me what my trade for 2023 was, and I said gold. And later on in the year, they had me back, and they said, gold went up, but it underperformed the equity markets. And I said, not in risk-adjusted terms, it didn't. And that, again, is an old school thing to look at the amount of risk you're taking versus the amount of return that you make, because, again, risk is the more important factor. And gold has very little risk inherent in it. But that's another thing. We talk about that on another show. So I've been fully long gold. I don't mean my entire portfolio. I just mean a much larger chunk than in the past since November of 2022. And I always when it gets to be that big, I start to think, okay, I probably got to taper this off a little bit, for the purposes of rebalancing, although I don't really follow rebalancing, I follow price. And I looked at this and I said, no, I don't, because I had a target of 2,400 for gold. I actually was in a dealer's office, just a small local dealer, just selling a couple of coins quickly because, the reason's not important. But there was a guy in there selling a lot of coins, and I think we were selling them around 1,800. And I said, yeah, I got about 34 more of these particular 1-ounce coins. And he said to me, by the way, anyone who wants to come and find me, I also have guns and dogs. But I said, I have about 34 more of these particular coins. And he's like, you should be in here selling all of them. I said, I will meet you back here in November of 2023. And of 2024. And if gold hasn't hit 2,800, I will buy you a coin. Now, it's not there yet, and it's not November yet, but that was essentially, my target was 2,400. I was kind of breaking his balls about that. But we hit 2,400, then my target became 2,760, and then we hit that. And now I look at it, and I see no reason to lighten up on gold. If anything, I see the opposite, and here's why. You brought up the times that we live in. People think gold's an inflation hedge. When you look at the data, it's an inflation hedge when the Fed is not fighting inflation. Because the only real competition in the market to gold, I don't believe it's competition, but the only real competition in the market to gold is interest rates. So if the Fed is raising interest rates, because there's a belief that you can't get a yield out of gold, there are ways to do that, as you well know. But so as yields rising, people are like, well, I've just got this pile of gold and I could be earning 4.5% in a treasury. I'm going to sell gold and go into treasuries. Right now, the Fed is cutting rates at a time when I personally don't feel inflation is beaten. So the only times in history where equity markets and gold have rallied at the same time and have made new all-time highs at the same time was during periods where the market was predicting inflation and the Fed was not, or the Fed at least was not fighting it. And that's what I see here. And you could see it in the steepening of the yield curve, which means the front end is either coming down in yield or stagnant, and the back end is going higher in yield, right? And that's what's happening right now. So why is the 10-year and the 30-year going up in yield? Because in order to hold a dollar-denominated asset like a U.S. Treasury for 10 or 20 or 30 years, you need to predict where inflation is going to be. Well, obviously, people who want to hold these things think inflation is going to be higher because they're demanding a higher and higher yield in order to beat inflation. And at the end of the day, inflation, the way I learned it in college, inflation meant the expansion of the monetary base or more money. It didn't mean prices moved. The effect of inflation was that prices went higher. And lastly, I know I'm rambling, with inflation, people forget comes asset inflation. Stocks, your home, and what is gold? Gold is an asset. So if inflation is coming, the price of your assets are going higher unless the Fed is trying to stop those asset prices from going higher by raising rates. And currently, not only are they not doing that, they're cutting rates.
Yeah, I was going to ask you that question. I mean, we've seen the 10-year Treasury and the 30-year move up almost exactly 50 basis points since the day they lowered the front end by 50 basis points. And I agree with everything you just said, 100%. But I'm going to add something to it and get your opinion on it. You know, all of that is true in a vacuum. Where does weaponization of the Treasury market come into play in your mind with everything you just said that I agree? Why would anyone want to hold a Treasury where inflation is running at the levels that it is? If we listen to John Williams of Shadow Stats, who just cites the numbers the way they used to be in 80 and 90 before they massaged it by replacing things with hedonics, I think it's called. The point of it is that this is a new phenomenon where now our creditors are questioning the safety, not only for inflation. I don't think default risk has quite crept into their psyche yet, but weaponization has. And when we are a country that has confiscated $5 billion worth of Russian treasuries and given that money mostly in the form of weapons to the Ukraine, a lot of countries are wondering, are we next? Will this exacerbate, in your mind, the steepening of the yield curve?
Yes. Now, the reason I just bluntly say yes is because there's a number of things that you mentioned in that question, a number of sort of branches to that tree you just asked, and they're all accurate. Okay, when the West, we'll call it the West, but it was the U.S., booted Russia from the SWIFT system as part of their sanctions, every bad actor and emerging market said they could do it to us if we don't bend the knee. And that's not the way we used to make countries bend the knee. We've always made countries bend the knee. But it used to be with the carrot more so than the stick. And if it was the stick, it was militarily. And I don't agree with that either. But this was different because this is a self-inflicted wound. This is one where huge economies like China and India, and secondary economies like Russia and Vietnam and some of these other ones, South Korea even, their central banks are buying gold because they're saying, well, what if we piss off the wrong president? They removed Russia from the SWIFT system. Their economy took a tumble. And then what happened from that? Encouragement for the BRICS countries to go a lot quicker and a lot more serious into their own currency and into the BRICS currency, which, by the way, they're saying is likely to be gold backed. So, because they can't back it themselves. I was taught early on in college that when you buy a currency, it's like buying a share in that country's economy. Now, that's been bastardized in a lot of ways. But when you buy a share of the U.S. economy now, you're getting diluted with more and more issuance every single day and every single second. So you own less and less of that economy. And these countries didn't have reasonable businesses for people to buy a share in their economy by respecting and accepting their currency. Gold is that thing that it's impervious. I mean, this is the thing that excites me the most. By the way, I know you're a gold company, but anybody can go back and watch about 2.5 years of my commentary, whether it be on TV or our own show. When I talk about gold versus Bitcoin, which maybe you're going to mention that, maybe you weren't, people say, well, Bitcoin might be better than gold. I don't see how. The ultimate rally to the highest possible price for gold comes in the next form of war, which is going to be a cyber war. Right? So the next evolution of global war is likely to be cyber. So our grid goes down and it's like, look, I promise you, I'm going to pay you from this wallet. As soon as the power comes back on, I'm going to transfer you my Bitcoin. Or, I usually keep American Eagles at my desk just for shows. I don't have one right now, but I can literally hold up and go, look, I'll give you this coin. This is worth about $8,000 right now if you want to go buy food with it. Do me a favor, let me have that motorcycle. It's like these things that the grid will not support, gold can still buy, and it doesn't matter. I mean, I think short of a nuclear war, gold's impervious to damage. That's why we can find Spanish doubloons under the sea, and they've lost minuscule amounts of their weight in gold because nothing harms gold physically. So I've gone off on a little tangent there.
No, I want to say something, and I'm gonna mess it up, but I've talked a lot about it because what you just said paraphrases exactly what Adam Lipinski, the head of the Polish National Bank, says. This dude's been buying gold, outpacing almost every country, and his statement was something just like this: "We own gold because when someone shuts off the power to the financial system in a market where all financial records are held digitally, we hold gold because it will allow us to, in essence, rise from the ashes." Now, it was something to that extent. He just said this recently, and he also goes on to say, not only that, it's virtually indestructible. I mean, that's pretty much what you just said in a far more eloquent way. But this is what the head of the Polish National Bank said, and it's interesting. They leave crumbs. He says, of course, we don't expect the grid to go down and we don't expect these accounting records to be destroyed. But, part of the duty of the central bank is to be prepared.
And we also don't expect Publix to not have water and to not have
exactly.
eggs. And Lipinski is somebody who knows what a grocery store in communist Poland looked like. And it looked very much like Publix just before a hurricane's supposed to hit.
See, brother, this is what I mean about you being old school. This is why I was really excited to have you on, because to me, old school gets it. It's about big picture. You're someone who understands the micro, but also really understands the macro and able to mesh it all together. I'm just going to ask you a couple more questions in the essence of time here and respecting that. And I really do appreciate you being here, Bob. You're awesome, man. All right. So over the last 12 months, we've seen gold rise 40%. We've seen silver up 40% this year as well. This increase has been remarkably steady, as we've talked about. And the dips have been met with more buying. It's something that, as someone like myself, I'm not used to seeing that in 35 years. Most of the time, when it would get stepped on, it would get stepped on, and then stepped on more, and it would just disappear and wouldn't come back. That's not happening now.
Right.
Gold and silver both showing great resiliency. In your mind, is this the BRICS? And are they, because to your point, they have agreed in principle. Dilma Rousseff, the former president of Brazil and the head of the new development bank, said, yes, we've agreed in principle to a new settlement token called the unit that will be traded over Project Enbridge, and that will save all of that stuff for another interview, but it will be backed by gold, 40%. Is that what this is? Is this the rest of the world quietly pushing back against the hegemony and looking to distance themselves from reliance on the treasury market? And as a footnote, gold has pretty damn close to doubled the performance of the 10-year treasury over the last 25 years. But what it also has is no counterparty risk. Is this, in your mind, as the outflows of the ETFs, as the positive real yield, as a strong dollar, all of these things, a strong stock market, all of these things that should say gold should be in the ashes, yet it keeps on going higher? Is this, in your mind, the BRICS? Is this the central banks that are pushing away quietly?
It's the BRICS, but it's more than that. I don't believe that the dollar, I don't believe you or I, being near the same age, or Joey for that matter, will live to see the dollar not being the reserve currency. But the average lifetime of a reserve currency is right around 80 years, and we're at about 112. So it's going to be one of the longest stretches in history, mostly because, the U.S. does protect its interests, whether you see that as a positive or a negative thing. They made a fatal mistake by cutting Russia out of the SWIFT system because, again, globally, that was viewed as they can do that, right? It was looked at by a lot of these leaders as, wow, that can happen to us. It goes back to, right when, for example, in Libya, back in the early 2000s, when Muammar Gaddafi saw what was going on, he completely gave up his nuclear plans. Now, he ended up getting killed by, the Arab Spring, but it was documented in a couple of books about how when he all of a sudden turned around, stopped bad-mouthing the U.S. and abandoned his nuclear program and started wanting to join the global community, was right after the U.S. attacked Iraq. And he said, oh, they'll actually do that? And this is the same thing financially. And that's why that was such a critical mistake. I'm not opining on whether we should be on the side of the Ukraine, the side of Russia, or the side of anybody. What I'm saying is that was a critical mistake for the strength of the dollar long term. Now, this is, again, why I sit on this sort of throne of gold in my mind, because I think, okay, so what would they have to do to get that trust back? Well, they would have to back the dollar with something, or back the treasuries with something. Does that mean we're going to a gold standard? No, I don't think so. But it does mean that there has to be assurances, and I think that's going to be physical assurances. And I'm not sure what form that takes. It's above my pay grade. But, you're talking about default.
I'm sorry to interrupt you. I was just going to say, follow that train of thought, and then remember where you were there. Judy Shelton saying, yeah, we should allow the 30-year treasury to pay a small coupon like 2% and then be redeemable in gold at the end. Is that what you mean?
Yes, that's a great commentary of it. Another way that it could work is Steph Pomboy. I don't know if you know her, macro mavens, very, very smart analyst. She suggested, this was her suggestion, not mine, that U.S. federal treasuries become tax-free in order to encourage domestic holding of treasuries. That has nothing to do with gold, right? But that'll hurt the muni market. So then the states have to actually start to get their fiscal houses in order, because the muni market's not going to be as attractive as the federal market. But I digress. There has to be some sort of come to whatever, savior you believe in moment where they have to say, look, we have to do better, because now they know we'll do what we have the ability to do. And just saying, nah, we won't do that to you isn't going to work, because they're the guy on the street where you and I grew up that nobody trusts. That's what's happened. And that's what the dollar now represents. It's the tough guy, the rich guy that nobody trusts, and everybody kind of, looks over their shoulder at him. And that's good. That is about as bullish as a case for gold as I could find.
Yeah, I agree, man. You're amazing. You got a great perspective on things, and I respect. Last question, Bob. We've heard Kamala Harris say that if she wins, she would like to double the corporate tax rate, to pop up cap gains to 44% if she could, and impose unrealized gains. And you got guys like John Paulson saying, well, if she wins, I'll yank $9 billion out of the market the day she wins, and I'll put it into gold and cash. Without, remaining agnostic here, you don't have to if you don't want to, but I respect your desire to do so, kind of like what you're saying about the Ukraine and Russia, which I agree. Better not to lend commentary on things like that. Do you have an opinion on how the election results will affect our investments? Let's just make it easy.
Okay, so before I say this, I want to throw this out because you talk about remaining agnostic. I can't be agnostic on this subject. I voted for Bill Clinton twice. I voted for George Bush once. I voted for Barack Obama once. I have voted both sides. I vote the way most Americans used to vote. What does this particular set of policies mean to me? How does it affect me personally? Because I believe in sort of governing out, starting with your house, going to your HOA if you have one, going to your local community, going to your local government, your state government, and going out, right? That's what I believe is important. President, like who cares? That's what I say all the time. But the one place where the president actually makes a measurable difference is in trade policy, and they have a heavy hand in tax policy, right? Increasing the corporate tax right now, what Trump did, so presidents get too much credit and too much blame for economic growth and economic collapse. Just like a quarterback in football, they get too much credit and too much blame. You look at a situation, what Trump did in his last term, he took an economy that had been growing for 8 years, a bull market, and extended it for another 3 until COVID. If you look at the average length of a stock bull market before a measured bear market, meaning over 20% downdraft, they generally last about 8 to 10 years. And Trump took about an 8-9-year-old one and made it go out to 12, 13 years, right? And he did that through deregulation and the pressure that got corporate taxes cut, right? That's the achievement, not the jobs. Government doesn't create jobs, all that stuff. What government can do, especially the executive branch, is put pressure on the people who do create jobs, right? And give carrots to the small businesses that are really the largest creators of jobs. And that's through tax policy and deregulation. Vice President Harris is talking about absolutely stabbing small business and individuals in their job-making heart with these kinds of statements. Okay, unrealized capital gains, are you insane? Now, they say that, well, it's only going to affect people that make, I think the number was 400,000, but let's say it was 400 million. When have you ever seen a tax that's implemented by the U.S. government removed? It doesn't get removed. It gets dropped down to lower income levels, or inflation takes us all up to that income level over time, and now we're all taxed on capital gains. That means when inflation hits, it becomes a double tax on people because your house price goes up. They reassess you when you owe the cash, and you don't have it because you're not going to sell your house for it. People that are growing businesses will sell their business to pay the taxes. And now the big corporations who have it, and what do? They eliminate jobs from the small business and just absorb the sales. It's completely crazy. Increasing the corporate tax rate now, when we're on the verge of stagflation and possibly an approaching recession, is lunacy. Now, there's a friend of mine named James Fishback who you should talk to at some point. He's a financial advisor to Vivek Ramaswamy. And we've had Vivek on our show as well. We've had James on our show. He just did a speech. And if anybody looks at my Twitter, it's Bob_Iaccino. I reposted it. One of the things he said about Trump was take him seriously, but not literally. What he's saying are negotiation tactics, right? He did that in 2016. He's likely to do it again, where he threatens something and then they meet in the middle. And it's actually in Trump's book, which I didn't read, but James did. And I trust that it's there. For Vice President Harris, I say take her literally, but not seriously. And the reason I say that is because she literally wants to do these things, and these are not serious proposals. And hopefully, if she does win, which is possible, Congress is the other way and stops her from doing these things because it hurts everybody without fail. There's no exceptions.
On a macro scale, it just says to me that this is someone who favors socialism over capitalism. That's for sure.
It's not a serious capitalistic policy.
No, it's not. I want to thank you, man. This has been one of the best 40 minutes I've had in a long time. Enlightening, entertaining. I guess that doesn't say a lot for a guy who's working too hard, but I, in all seriousness, truly, truly enjoyed our conversation. You're one in a million. Thank you for coming on. I hope, how can people follow you a little bit more? Because the stuff that you say, the old school stuff that you say, people need to pay attention to in a big way.
Well, number one, I want to compliment you on the music background there, the David Bowie and the 6 axes you have on the wall. My drums are right in this corner over here, so we're cut from the same cloth. Again, old school. You don't want to use DJ equipment. You want to play actual instruments.
And that's Mick Jagger right there, and that's Jimmy, my favorite artist.
That Jimmy Page or Hendrix?
That's Jimi Hendrix.
Jimi Hendrix. That's Jimmy.
Yeah,
Jimmy Page, you have to say his last name. Jimi Hendrix, you just say Jimmy.
Yeah, that's Jimmy. But I love the rock and roll. So how can people find a little bit more about what you're doing, Bob? I think that would be very people to do.
The easiest way, I'm on LinkedIn. I'm easy to find there. But the easiest way to actually communicate with me and see what we're doing on a day-to-day basis is on X, formerly known as Twitter, which is Bob_Iaccino. I don't do Facebook. I don't do Instagram. I don't like those companies. That company, I should say. I don't mind the stock, but I don't like the company. We do have a YouTube channel now, Futures Edge Finance Unfiltered. The channel is new, so it's young. So we will actually notice if you subscribe and comment. But we get about 60 to 80,000 views per show on the various platforms, the Futures Edge. We're on all the podcast platforms. If you want to talk to me personally, it's X, Twitter. If you want to just see what we're doing, look for the Futures Edge Finance Unfiltered on any podcast platform, YouTube or Rumble.
Right on. Well, I watched some of those, and if you're ever hurting for someone at the last minute, you call me. I'll jump on and shake things up with you anytime.
Not only am I not going to do it because I'm hurting, I'm going to invite you on. I'm going to send you some dates when we're done here.
Right on, brother. Bob Iaccino, one of the best in the business. Thanks for coming on, brother, and I will greatly look forward to picking up where we left off, but great appreciation for coming. Hope you have a great rest of your day, man.
You too, man.
Little by Little with Andy Schechtman.